Hi there, welcome to Nepi Invest. Welcome to a rainy Brisbane. I am recording this video on the 11th of May. I'm getting a little bit ahead of myself because I do two 12-hour day shifts on Thursday and the Friday. And welcome to Babylon Pump and Power. I'm not sure if I talked about this company in the past. It's a very small company on the ASX. The market cap may be less than $10 million. Share price is had historic lows for this company. They are operational cash flow positive, but I think just what they do is not sexy enough to get the market interested. They call themselves pumping and power generation specialists. So, what does Babylon Pump and Power actually do? Well, they do provide or have a rental equipment division, renting such items as positive displacement pumps, multi stage pumps, dewatering and fluid management, liquid and air filtration, power generation, and compressed air. This company is called Power and Pump. Actually, it's called Pump and Power. They also have an engine services division where they do rebuild engines. Not only do they rebuild engines, they have engine assessments and diagnostic services. They also have a project division. So all in all, I'd probably call Babylon Pump and Power a specialist resources services company founded in February 2017. It didn't take long for this company from being founded to being ASX listed. So listed about 9 months later in November 2017, another backdoor listing via IM Medical, IMI. The executive chairman and co-founder is Michael Shelby. And the current market cap for this company at 1.1 cents is $12 million. Last time I looked at the share price, it was actually 1 cent. So that market cap is down even further from there. And the ticker code for Babylon Pump and Power is naturally enough BPP. Now let's have a look at some financial information for Babylon Pump and Power. And this is just the half year data. Revenue is climbing up to $13.7 million. Gross margins is not that high. You wouldn't expect gross margins to be high for this sort of company, 15.6%. They were not operational cash flow positive in the half year. They were in the most recent quarter, and that's the reason I'm doing this video. So maybe if they do become operational cash flow positive on a consistent basis, maybe the market will get excited about this company, and maybe that excitement will push up the valuation of Babylon Pump and Power. They're also not profitable. They were loss-making to the tune of $2.4 million in the most recent half year. They also have debt, $10 million of debt. So even though the markup is nearly $10 million, that net debt means the enterprise value is more like $20 million. P/S ratio 0.88. Have $6.3 million of equity, which was up from $5.7 million in the most recent half year, or the recent half year previous to this half year. Now let's have a look at their two most recent March quarters just to see how this company has been progressing. And to be fair with you, I have not really followed the fortunes of this company until the most recent quarter. And when I show you that, you understand why I have paid a little bit more attention to the fortunes of this company. So if we go back 1 year ago to the March quarter 2021, $2.8 million receipts, but the company was operational cash flow negative by $3.2 million. They did grow their cash on hand from $5.3 million to $10.3 million. And the reason they grew the cash on hand was because they raised $5.3 million, they borrowed $5.2 million, and they made a $5.6 million acquisition. So one of the reasons why maybe I've become interested in this company is because one of these acquisitions they have made has been successful and has meant the company has now become operational cash flow positive. So let's have a look at the most recent quarter to see and understand why I'm interested in this company right now. So it seems like the company has grown. Receipts are up $4.4 million, and more than likely, some of this growth in receipts is because of the acquisitions the company have made. And if it is because of the acquisitions, these acquisitions have been quite astute from the management. So that would be a tick in favor of the management. And not only have receipts grown by 4.4 million, some of that costs have actually come down. So product manufacturing operating costs down 800,000, staff costs up 600,000, but overall costs have not really increased as much of receipts. And because the receipts have grown at a considerable rate over the past year, this company is now operational cash flow positive on a quarterly basis. The important thing moving forward for Babylon Pump and Power is that they continue being operational cash flow positive on a quarterly basis. They also repaid $1.4 million of loans. And one of the reasons why it's good to repay the loans is because they spent $260,000 on interest repayments. So if they didn't have to repay any loans, they didn't have to pay any interest. The cash on or the operating cash flow would have been more like $1.4 million. So that's a really good reason to repay loans to decrease the interest costs. So why are they repaying the loans? Well, they do have a little bit of debt here. In fact, $11.2 million of debt. I would like to see this company decrease their debt levels. And it seems like if they do generate cash flow in their operations, they will repay their debt. So this is all about capital allocation. What are they going to do with the cash generated in their business? And I think the best thing they can do is to repay their debt. And when you do look at the facilities, the interest rates on these facilities aren't that high. So it looks like most of them with NAB at 5.72%, 4.54%, and 4.29%. They also have a facility with Toyota Finance, only $750,000. That's at 4.13%, and one with Advest Finance, that's at 4.22%. So unlike other companies I featured in this video series, the interest rates on these facilities are not that high. Some of these interest rates I've seen are more than 10%, some more than 15%. And when you do see interest rates on your facilities more than 15%, you want to pay that debt down as soon as possible. So it does seem like Babylon Pump and Power are moving in the right direction. A good March quarter, but I'd like to see another good quarter for the June quarter and another good September quarter as well. I'd like to see continual operational cash flow positive, and I'd like to see this debt coming down through time. Now let's have a look at the receipts history for Babylon Pump and Power going all the way back to December quarter 2017. From that particular quarter to the June quarter 2020, we saw a really nice growth in the receipts from about 410,000 in the March quarter 2018 to a top or high of 7.4 million in the June quarter 2020. But since then, receipts have really gone sideways. In fact, we saw receipts really fall off a cliff until the March quarter 2021, where they only saw $2.8 million. I'm not sure what was happening there. Probably want to do a little bit more research why receipts really fell off then. And receipts over the last 4 quarters have just gone sideways between about $7 million and 7.76 million, 7.6 million. I'd like to see receipts growing gradually through time. So that's another cross against Babylon Pump and Power, is just the lack of receipts growth in the last 4 quarters. In fact, you can go back even the last 8 quarters where we've seen a lack of growth in receipts. Another negative thing about Babylon Pump and Power right now is just the lack of interest in the market. This is the weekly chart for the company going back to early 2018, and no uptrend in the share price. In fact, there was a little bit of hype in this company towards the end of 2020 into the start of 2021. Share price was pushed up from about 1.3 cents to 3.8 cents, which was the high. But ever since that high in the share price, which was reached towards the end of 2020, the share price has been falling and consistently falling at that. Share price has decreased from 3.8 cents to a current share price around 0.9 to 1.1 cent. So moving forward, the most important thing the management of this company can do is to continue providing operational cash flow positive quarters and continue to pay down their debt. If they can continue doing that, I think sentiment in this company will shift, and you will see the market or certain sections of the market getting interested in this company. So that's the main thing I am looking for in future Penix 4Cs for this company. I want to see continual operational cash flow positiveness in the company. If they can do that, I think the share price will turn around eventually. That's all I have for this video, this March quarter Penix 4C video for Babylon Pump and Power. If you do have any questions about this company, or you know this company quite intimately, I'd love to know your thoughts, your opinions on this company. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.